Welcome to the Pirls Stock Market Commentary video featuring the proprietary bull, bear, point, and figure market breadth summary chart for January 22nd, 2017. Market breadth. With this past week's fractional market decline, our bull, bear, point, and figure ratio at 1.51 fell from 1.84 last week, remaining in bullish territory. The total count of securities in bullish or bearish patterns decreased 3% to 3,063. The count of bearish stocks increased 10%, while the count of stocks in bullish patterns decreased 10%. The Pirls P&F Market Breadth Summary Chart shows us a market now 10 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. In order to receive the Pirls Stock Market Commentary via email, free of charge on a weekly basis, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 76 points for the third decline in 10 weeks. At a positive 269.54 points, it continues above the November 2014 and March 2015 tops, continues below the December 2016, May 2016, March 2015, and November 2014 tops above plus 100, as well as continuing above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. At Tuesday 1-3 close, the CCI 20 daily formed a zero-line reject long entry signal within the plus or minus 50 range. At Tuesday 1-17 close, the CCI 20 daily fell below the plus 100, so we exit the trade Wednesday 1-18. The result of this trade simulation was a gain of 106.03 points on the Nasdaq Composite, or $3.30 per share of QQQ. Now at a positive 86.38, we wait for the CCI 20 daily to return to the plus or minus 50 zone for a potential new trade. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 38 weeks ago, while the daily CCI 20 began a Woody's uptrend 9 weeks ago. The CCI 20 weekly has fallen to a positive 141.65 from a positive 169.48 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver and some tech on top. Banking, brokers, and oil services on the bottom. Bullish, comp tech continues in the top 5. Semis has entered the top 5. REITs and net workers have left the bottom 5. Bearish, gold and silver continues to lead the top 5. KBW Bank has entered the bottom 5. Brokers has left the top 5 and entered the bottom 5. S&P Retail has left the top 5. Oil has left the bottom 5. Focus this week from www.zerohedge.com. The last time oil speculators were this long, crude collapsed. The following are some key points and charts. Despite soaring rig counts, surging U.S. shale production, and increasing doubts over OPEC/NOPEC cuts being sustained, albeit with Saudi jawboning, oil speculators have decided to add their long positions in the last week, pushing the net position in futures to a new record high, above the 2014 peak from which crude collapsed. As Raoul Pal detailed previously, look at the term structure of crude oil. We've got a fairly steep contango for a few months, but then we see backwardation in the belly of the curve. So apparently, we're not going to need storage after June or July, so it's going to be a non-issue. Those tanks are going to be empty. I'm not buying that story. Speculative position in crude oil was all-time high. In fact, if I took the trend going back from the early 80s, it was 7 standard deviations above that trend and well over 3 standard deviations, maybe 4 standard deviations from the trend in the last 20 years or 15 years. So the position was huge. If I look at it now again, I'm looking again at my Bloomberg screen as we speak. It's equal to where it was. So it came all the way back down. It's got all the way back up. So the market is wildly, gigantically bullish on crude oil. And that is something that starts looking like an opportunity to me on the short side. Eric, I don't want to be on the short side of the oil trade unless it's using options or something protected. Raoul, yeah, I agree. What is interesting, oil volatility has been coming lower. Look, I don't think it's going to get back to where it was in 2014 when it was trading below 20, but I think it has come down from a peak of 80, a kind of a real trading range of 50 down to 30. If it comes any lower, the ability to buy options start to make sense because oil volatility can go to 80, can go to 100. So maybe buying some puts on oil, or you buy kind of out of the money calls, out of the money puts, if you've got the view that you have that there is a tall risk events of something that Trump administration will do to drive up the price of oil. And that's possible. Don't forget that the economic policies is credibly pro-oil in the U.S. right now with the new administration. So it is in that economic interest to drive up the price of oil. You've got all of the reasons why the oil price should fall, all of the geopolitical reasons and business reasons why the U.S. wants a higher oil price. So how does this play out? What does that mean for us? Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and as always, wishing you true success.